Welcome to another video. So today we're going to be looking at a couple of charts from the latest edition of the weekly macro themes. And so this is the weekly publication where we look around the world across markets to identify the most compelling macro themes, trends, looking across economics, sentiment, flows, valuation, earnings, everything. And so today we're going to be focusing on the economic side of things, and we're going to be looking at China. So we just got the China PMI results, the official ones out for March, and so we're going to start by having a look at the chart there. So as you can see over here, what this chart is. So first of all, you've got the black line is the manufacturing PMI. And this red line is it's a little bit of a odd indicator. What it is measuring what proportion of all the sub-indexes of the PMI are over the 50-point line, or 50 or above, basically. So this is the delineation between contraction and expansion. So it measures the breadth of the contraction or expansion. And so you could see around this point here, which was the weakest point in quite some time, got down pretty low. It did get lower there, but really this has been the weakest point. Looking across a range of different indicators since the crisis, really. And now you can see there that breadth has shot up. There's a very strong reading here. I mean, it's pretty much as good as it gets. Can get better. And so on that note, actually, let's have a think about what's been driving it. I mean, you've got this big here arrow and label there, which kind of gives you a hint. So yes, stimulus has been a big factor here. Fiscal stimulus, monetary policy stimulus, and that's across a range of different monetary policy measures that they've been using. They've been also doing targeted stimulus at the property market. That was quite some time ago now, so it was probably back around here. And that's really had a big impact on the market. I've talked about that in another video, and I'll post the link down in the section below. But you've got fiscal stimulus, monetary stimulus, property market stimulus. But at the same time, you've also had, you look at the global economy at the moment, and they're in the middle of an upturn. It's pretty clear in the survey data. We're seeing that in some of the hard data as well. You're seeing back up in global trade volumes, and so that tends to sort of add to the case. So yes, if it's only stimulus driven, then it's never going to last very long. But if you have a few different factors coming together like this, it can start to produce a bit of a self-reinforcing cycle. And so it's something that is definitely one to keep at the top of your radar. And the second chart here, the reason why I put this one in is just to highlight, this is another sort of hard data indicator. So you've got the red line is railway traffic, freight volumes, and the black line is waterways, and you can see there it's very sharp upturn. So for those that have the healthy skepticism that you should have when it comes to China's data, you look at this and it tends to provide a bit of confirmation to that. So that's the economic picture for China, and as I promised in the headline and in the notes, there's a bit on copper. So as most of you probably know, China is the largest consumer of a lot of commodities. For copper, it's over 50%, and for a lot of other commodities, it's almost half the market. And so when you see the manufacturing sector, which is a big driver of copper demand, there's property construction demand, but then there's also the manufacturing side of things, electronics, etc. You tend to your first reaction should be to go and have a look what's going on in copper price. And what I got here, so this red line is actually the composite, so it's actually a mix of the both the non-manufacturing and the manufacturing. And one thing to note is that China's non-manufacturing PMI is more than, you wouldn't call it just services. A big component of that is construction, so that's why it does actually make sense to look at the two together when it comes to copper demand. And as you can see, the breakout they had was a fantastic textbook breakout from a triangle pattern there. Shot up to the upside, and now it's really you can sort of kind of see that there's a downtrend line there. It's really calling that downtrend line into question, and it's fundamentals that are driving it. You've also had a big spike in speculative futures positioning, so people got really quite keen build up on this, and that enthusiasm's starting to wane a little bit. But what I talked about, the strength of the economy there at this moment, the cyclical strength. And I say cyclical strength because it will roll over at some point, but at the moment, you may be bearish on the long-term story, but it'd pay not to ignore what's going on there at the moment. So for the cyclical view, and it's something that can help actually provide a fundamental backing for a change in trend in copper. And so if we do see further pullback in speculative positioning, I wouldn't think so, because after this data, that would be the kind of sort of reset that the market kind of needs to push higher. And say, while there's a good economic cyclical story going on in China, you want to be bullish on copper. And I've talked about also in this report actually about how global trade's looking pretty good. A lot of the signs we're seeing more broadly globally, the other 50% of the demand, so China's a big part of it, but then there's also other countries that tends to provide a little bit of extra backing to the story. So I guess to sum up, pretty good data out of China for March in terms of the surveys, and that tends to present a pretty bullish case for copper and other base metals. So I'll definitely be keeping an eye on the risk factors, and I did talk about the risk factors in another video, and part of that does focus on the property market. And also you look at a market like China, economy like China, they've got the ability to really be forceful and step in with stimulus, but they also have the ability to go in and donk it on the head. And that's why if you look here, you can kind of see these little cycles. It's not actually seasonality as such. It's more that they do stimulus and then they do a bit of reform, or they put their foot on the accelerator and then they stamp on the housing market. And that would be probably the key downside risk for this trade, or this view. So look, I'll leave it at that, and if you have any questions, comments, or if you want to check out the report, make sure that you get in touch, or put your views in the comments below.